If you've just inherited and you're wondering whether you should pay off your mortgage, here are 3 things to consider while making your decision. First of all, where are you in the life cycle of your mortgage? Mortgages are amortized loans. This means that you are paying the majority of your interest in the front half of your loan, and at the back half, you're paying primarily toward principal. So if you're at the beginning of your loan, you could potentially save thousands, tens of thousands, depending on the size and the interest rate of your loan. However, if you're toward the end of your mortgage, at this point you are mostly paying down the principal and the loan is more or less free money. Of course, there are always nuances, but this is one consideration. The second consideration is, what is your interest rate? Many people think that paying off their mortgage is the smartest financial move they can make. But if you have a relatively low interest rate, let's say 3 or 4%, you may actually come out ahead investing your inheritance instead. It's important to note that the S&P 500 has averaged about 10% annually since its inception in 1957. So although we don't recommend that you invest your entire inheritance just in the S&P 500, it's a good example as to what the opportunity cost is of paying off your mortgage rather than investing. A third consideration is, what is your priority? We can do financial planning in a vacuum, but that's just not reality. If having a mortgage is stressful for you, if it keeps you up at night, if it impacts your mental well-being, then even if the facts and figures work out and say that you are better off investing, perhaps the peace of mind of paying it off is worth it. So to recap, 3 considerations when deciding whether you should pay off your mortgage are, where are you in the life cycle of your mortgage? What is your interest rate? And what are your priorities?